Morning, Jim Barrett from RJO Futures, Monday morning, March 11th. Notes and bonds, slight uptick this morning. Weak Chinese numbers overnight have firmed things up just a little bit. After a rout last week, notes and bonds got crushed. Not everybody, the bulls obviously got caught a little wrong-footed by a stock market that wouldn't quit, and data. Unemployment number way better than expected. You know, obviously fears at the end of the QE are reasonable, but it's not just that. I mean, you can't have it both ways. You can't have a booming economy and a flight to risk off. Obviously, we have risk on situation, and the backup in yields near recent highs in the 10-year up to 206, I think, made actually new yield highs on this move in the 30-year at 3.25, reflect kind of a lack of interest. The bonds aren't where it's at lately. Stock markets have been where it's at. No data today, no real data tomorrow. Wednesday retail sales, and Thursday the jobless claims, producer price index. Friday consumer price index, Empire State Manufacturing, industrial production, capacity utilization. So the reports this week are going to be toward the end of the week. Yields, yield curve has definitely steepened, which is to be expected in a risk-on situation. I mean, the market on a short-term basis a little, again, cowed by the rally in equities, but on a longer-term basis, you know, there's some doubts, or rather some doubts being removed about the U.S. economy's ability to possibly take off a little bit, even though answers about sequestration and the budgeting are pitfalls to come in the next few weeks. There's just simply a little better attitude about the possibility of the economy doing better going forward, and that typically is never good for bond prices. It will put some upward pressure on yields. Anyways, I can be reached at 800-500-2461 to discuss any futures market. Please give me a ring, and remember, there's a risk of loss in futures trading. Thank you very much.